Yeah, sharp like an edge of a samurai sword, the mental blade cut through flesh and bone. No, my mind's at peace, the world out of order, missing then the heat, life gets colder. Oh yes, I have.
Dead Price coming back at you guys. Another video of the dividend account journey here. We're gonna see how we have been doing since the last video. Not much has been going on. Market's just been in a chop, very boring chop. It's almost killing us. Once the market finally makes it out of this move, we'll see some type of action. But right now, the S&P, 10-year, and the dollar are all just kind of stuck right now. People are just moving the goalposts first. They're waiting for CPI. Then once CPI comes and the market does nothing, then they're waiting for the next Fed meeting. And then once that comes and nothing happens, then they're waiting for this. Soon enough, people are going to stop waiting and they're just going to start buying. A lot of the smart money has already been buying, and you can see that in the December dip through to February now, where we're at now. It was a huge run. Anybody who bought or went long pretty much made money. We were steadily adding to our portfolio, not as aggressively as I would have liked, but here we go. I'll show you guys my top winners for the month. Okay, top 5 winners. Number 1, we got American Express. Great earnings. Company's been doing good. I've been saying all over my Twitter, Instagram that banking is gonna have one of those 80s decades type investor booms, just because of the profits that they're gonna be pulling in off of these interest rates. Next up is Apple. Not very surprising. Apple has had a very dismal last year. Been steadily going down, and just a relief bounce here. Happy that it's bouncing, but I'm more happy with Microsoft at 3, who has been taking a lot of market share and scaring Google here. Google went into red alert, got pulled out investors that haven't been with the company in a while to talk about what are they going to do about Microsoft's attempt to come for Google with Bing and the ChatGPT. And then Google went out, showed off their AI that they've been working on for 10 years, and let's just say it was shit. Their a whole meeting that they showed it off went horrible. The stock dropped from 114 to 94, and pretty much Microsoft is kind of winning right now. We got Altria at 4. Very solid stock, safe. Nothing really much to talk about there. They just smoking cigarettes. Their vices like that are always gonna be hitting. You know, you can never. Even if the world, nukes could be dropping, people are going to be still driving to the 7-Eleven to get their pack of squares or get their Breeze or Jewel or whatever it is, And then at 5, surprisingly, is Shell. After dropping it lower in my target percentage, it's actually, oil's kind of been having a little rebound here, but we could attribute that mostly to the dollar coming up and a lot of the inflation hedges kind of coming up on some of this inflation worries with the CPI. I'm still short oil. I don't think oil is a good buy here, and I'm selling still. Now let's go to the top losers in the month. At number 1, we got 3M. A lot of talks about them with the hearing aid lawsuits really just killing them more, and just putting up pretty dismal numbers. Not much growth there. Kind of shitty what they've been doing. They literally said they're going to spin off 2 companies for shareholders, which would alleviate some of the pain, but then they pretty much make investors wait and make us hold 3M, and still have not given us those 2 spin-off companies. I was trying to sell those spin-off companies to alleviate some of the 3M pain, but it's looking like I'm going to have to wait even longer and endure a little bit more pain on 3M here. Not too worried, because my time horizon on 3M investment is a couple years still, and if we need to, we can very quickly throw 3M out and add another company in. Right now, I'm not really trying to do that, because I don't think there's another company at a better evaluation than 3M in its field. Next up, we have NextEra Energy, one of my favorites, and it's kind of putting up bad numbers. I wouldn't say it's putting up bad numbers. I would say the field as a whole is putting up bad numbers. Energy has been kind of getting hit. Natural gas getting hit. You can see number 3, energy again. Just like I was saying, energy has been getting hit. I'm not too worried about this. I think in the long time frame, such as 3-5 years, energy companies will still keep booming. the grid can't handle all these electric cars. There's going to be infrastructure, et cetera, billions of dollars pumped into the energy and infrastructure of America. And all these energy companies with pipelines and transmission lines that can supply that electricity and energy throughout America are going to benefit. At 4, we got Kimberly-Clark, guys. Was kind of surprised to see it up here, but not too worried. Kimberly-Clark's been one of our legacy stocks, very small, holding 1%. It's a very safe stock. They do a number of things, tampons, baby wipes, etc., you name it. Very solid business. Never see me selling this one. I'll keep it at 1 to 2% of my portfolio, just as an anchor. And then Rio Tinto. I was surprised here to see Rio Tinto also. I thought the China reopening with the whole COVID-1 policy or COVID-0 policy would somewhat turn Rio Tinto around back to the green, but it's just been kind of steadily staying kind of where it is now. And I'm not too worried about that because the dividend is very, very high here. If they can hold the company at the share price here and keep the dividend, I'd be happy. Now let's go over activity since the last video. I'll show you guys what I've been doing in the account since the last video. Not much, guys. Like I said, there's just been chops, so I haven't been worried too much about the account. I'm just letting the dividends kind of snowball. This withdrawal over here is just, I borrowed that against my account. I didn't actually sell anything. We can go over this first buy. I sold here Wendy's. I sold some Wendy's, took some profit pretty much, and lowered my target percentage. And then with that, I bought these companies. You can see Dominion, NextEra, some of my top losers. Innovative Industrial Properties, American Tower, some of my top REITs. Gaming, Leisure and Properties, Public Storage, REITs, and then CVS Health. You can see a dividend from AXP. Those dividends are getting bigger and bigger each time. Afternoon trading, we'll see 7 buys here. Again, CVS, American Tower, Innovative, WP Carey, another REIT, NextEra Energy, Pepsi, Gladstone. I'm loving Pepsi. It's a very solid company here too. It's been steadily in the middle of my portfolio. See here, another sell. Shell, like I said, I lowered my target percentage in oil, took profit on Shell, and there we go. And with that, that's what I bought. That's how I bought the $100 of other stocks. You can see the dividends are steadily starting to snowball. I want to see the REITs. I'll show you guys the REITs too after I show you guys this next page. Small buy here, Microsoft, Pepsi, some REITs. And I'll show you guys my REITs really quick. I did increase it to 2%. I know I said last time I was going to keep it at 1, but 2% is a good one right here. And I did actually sell. We had a company, Stag, that actually got bought out, took private, and we got paid out for that. And with that percentage that got taken out, we just increased percentages in IIPR, American Tower, and Gaming, Leisure Properties. You can see that these went to 8899. Still I'm still inching into the REITs, guys, so I wouldn't worry too much about the REIT part of this, but I do have a lot of good companies in here, like Gaming, Leisure and Properties, Hannon Armstrong, Aventis. This is Medical Properties. So if you want this list, you always can go down in the description and check for the M1 pies. I drop my pies all in the description. So if you want to just copy the stocks and invest straight into the pie with me, you can. Now let's go over new target percentages. I was kind of talking about that, but I'll just go over and show all of them. So still top holding at 9%, Intel and Verizon. At 7%, American Express, Apple, Pepsi. At 6%, Dominion, JP Morgan, Microsoft. At 5%, Altria. And then at 4%, we got AbbVie, Enbridge, Grief, Rio, and Shaw. At 3%, we got 3M, CVS, NextEra Energy, the Wendy's, UPS. And then at 2%, we got Shell. And at 1%, we got Kimberly-Clark. We lowered Shell, we lowered Wendy's. And with that, we increased percentages. I think we did 1 more percent in Enbridge. We did 1 more percent in JP Morgan, I believe, and 1 more percent in Pepsi. People have been asking where they could find the free ebook, guys. It's right on my Stan store. You can see here, right in between the 2 other ones, you see the free ebook option. You click there, put in your email, and boom, it sends you the PDF file immediately. So if you want a free ebook on day trading and a little quick how-to, that's perfect for you guys. Go over to my Stan store. I always drop in the description, or you can go to my YouTube links and find it there. I'll be on vacation all month, guys. I'll be going around all over, so I won't really be having time to be uploading too much. So I'm gonna pre-record a few videos and try to drop them this month, but I'll be back by the middle of March, so bear with me. Thanks for the subscribers and support recently. Appreciate all you guys, and thank you.
Fly in the teardrop. Wonder why a lone wolf go wrong with the clan. Only trust instincts and be one with the plans.